Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, December the 19th. The year's 2022. Let's talk trading. Sticking to your plan. These videos are for educational purposes only. Your results may differ from mine. Okay, one of the reasons I picked this topic was I had mentioned I was watching another trader's YouTube channel, and he only traded one pair, the euro dollar. And so, of course, that caught my attention. You know, it's like, hey, there's somebody that kind of thinks like me. So wanted to see how he did it. And I think I mentioned last night, seems to be one of the market structure traders. Anyway, then I watched another video. I think it's his most recent video, and he said that he wants to add another pair to his trades. Now, to me, it's like, hey, you had something that's working, you were successful. What's the reason you're changing? But the guy seems to be successful. It looks like he bought himself a new Mercedes. So the thing is, we'll just have to see. Maybe he succeeds, or maybe he winds up going back to one pair. I don't know. But what I do know is that, sticking to your plan seems to be difficult. Sometimes it's hard for me. It's easy to see something and do an airball trade. So what do you have to do to stick to your plan? Well, first thing is you need to have a plan. I know that might sound kind of funny, but if you don't have a plan, then you're just, anything could be a reason to enter. You might as well flip a coin, and really it might not even make that big of a difference. Point being is you have to have a set of rules, 1, 2, 3, ABC, however you want to label them. And that, if this happens, I do this. I used to, I made a few videos about being a trained monkey. You see the stimulus, you pull the lever, and you get your banana. The thing about trading is you can see the same stimulus. One time you get the banana, the next time you don't. You get a banana taken away from you. So I don't know if they've ever done something with monkeys where they do that, but I'm sure the monkey would get pretty upset. I'm wondering if he would follow the stimulus. Might have to do a little research to see if anything has happened like that. But the main thing to focus on is that if you see the stimulus, you have to take it. So, for example, here on this 1 minute chart, it broke out of that 1 minute flip-flop box. Right there, there was your short. You see, even before there was opportunity one that was probably worth about a pip if you include spread. As you can see here, we got a wide spread. Here's opportunity two. There was a chance to make pips. There's the second dot. Walmart likes to wait for F2 and then go take a third one, but he probably wouldn't take that trade because right here you can see you're coming into some congestion in this area right here. Also, part of your plan is if you're up so many pips, maybe you take it. Maybe you have up so many dollars, maybe you take it. And then you don't worry about what happens next. If they bring out a big pot of shrimp or more pips, however you want to look at it, that's okay. That you followed your plan, you were successful. But what happens a lot of times is you'll see something will happen that had you broken your rule, it would have been profitable. And that starts to weigh on your brain, but you can't let it. You just can't let that happen. You just have to stick to your simple triggers. When Walmart started, let's see if I can find it. I do have a chart with wall lines. Yeah, here we go. It was really simple here. So you belong at the 70, and that would have paid off. I mean, when you look here, you're over 20 for the past 7, 8 hours now. And these two were 18. That's close enough. So you can make pips on a simple wall trade. H1 open here, long at 70, short at 60. You went long. Doesn't look like your stop loss was ever threatened. And maybe you only want to take 2 pips. Maybe you want to take 5. Maybe you want to go for 10. It's up to you. But let's say you go for 5. That was your rule. But you go, okay, I could be taking 10. So then the next time you get in a trade, you go for 10. It whips or goes up 5, whips, goes up 8, goes up 9, and then whips back and then wipes out your stop loss. Now, had you taken your 5, you'd be happy. So just be careful when you're altering your plan, especially if it's working, because that's a killer. It really is. Something that's probably not in your best interest to do. Now, the other thing is, if you're losing and you are sticking to your plan, then that's maybe where you have to start making some, either a minor modification or a major overhaul. You have to determine, why are you losing? Maybe your lot size is too big, so your stop is too close. Maybe it's just not a method that produces enough winners. Maybe you're trying to get more than what your system's really going to generate. It is kind of frustrating for me when I see, once again, you see these big trades and maybe you're only taking 2 or 3 pips, and then, like I said, they bring out a big pot of shrimp, but I've already gotten out of the line. So then I want to take more, and then the next time I get in a trade, I'm up 2 pips, and the next thing I know, what happens is it reverses on me, and then I'm stuck for a while. Happens more often than not when I fail to take those pips. I think that's how I get good at those inflection points. So with your trading plan, you just have to look at it and see if there's some type of adjustment that you need to make, either first in your execution of the plan, or is it the plan itself? Maybe you think you're trading the plan, but you're not quite doing it to the letter. For example, let's just say you're supposed to get in on a turn trade. Like right here. But your entry is late. I'm going to pause for a second. Yeah, I had to pause. I had to cough and blow my nose. I caught a cold a couple of days ago, and I'm over the hump and in the recovery stage right now. And I was teasing with Walmart because he was sick a couple of weeks ago. I said, Walmart, you gave me your cold, even though he's in Atlanta and I'm way over on the West Coast in Oregon. So, but anyway, you really have to stick with your plan and see if you're not executing it perfectly. Because sometimes if you're just late by a pip or 2, especially with these spreads and the way they move it, it's a killer. I mean, if you miss your entry by a pip, that could be the difference between, a loss or not. And the other thing to note, a little, not necessarily a trick, but something you have to realize is if you do miss it by a pip and you're in late and you wanted to get 2 pips, look for 1 pip. Just take the 1 pip, because pretend as if you got in perfect and then still keep your take profit at the same level. Because more times than not, it will hit it, but you're trying to, make up that other pip and it'll reverse on you. It seems like the market knows what you want it to do and it says, nope, we're not going to do that. But part of the dilemma also is time, time in trade and time to profit. Meaning, if you want 10 pips, how long on average does it take that pair to move 10 pips? I mean, sometimes it could be in less than a minute. Sometimes it could be, hours. Literally, hours. So you want to be mindful of that too. And so you can see right now the pound is ranging. We put in an outside bar followed by an inside bar. Oh, and if you're wondering what that indicator is, it's one that I didn't write. It's called in and out. It's back in 2006, but it just paints these stripes. And there really wasn't anything for me to add to it. I guess I could always put boxes on it or something to, label it or something, but I wrote my own inside bar indicator, so I just use that one as is. One of the few indicators somebody else wrote that I use as is, and I haven't modified, to the nth degree. But, sticking to your plan. Because, one of the worst things that can happen is, especially for the brain management side, is when you fail to stick to your plan and your plan works out. All those woulda, coulda, shouldas, if you had only stuck with the plan. And it's hard because of the brain management. When I talk about placing your bets, that can, take away some of that trading anguish because you put your trade on, you put your TP on, you put your stop loss on, and then you basically walk away. Do something else and, let the market do what the market's going to do, as opposed to live and dying by every tick. It's like, it's funny, it's almost like you're at a horse race or something. It's just like, come on, come on. You're cheering it on or you're yelling at it. It's like, and it's just can be such an emotional drain. And it can cause you to get out of your trading plan. Oh, it's funny, Walmal's coming in, calling me. Hey, Walmal, I'm finishing up a video. I got about 90 seconds left. You want to say hi to the traders?
Hi, traders. Well, just want you to know that I went in long. We'll see what happens in this trade. I'll flip-flop box on the 1 minute, but we'll see what happens.
Oh, you got in about 84 long?
Yeah, I got in at, let me tell you exactly. I got in at, actually at 82.4.
Oh, okay.
But I should have gotten out, but it's okay.
Yeah, I picked the topics sticking to your plan, so maybe tomorrow you can weigh in on it.
Sounds like a good idea. I should have stuck to my plan here. If I would have done that, I would have been a nice little profit, but I didn't stick to my plan. So that's a good topic to talk about.
Yeah, okay. So, fellow traders, if there's one thing you need to do, it's stick to your plan, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.